Today, e-cigarette company Juul agrees to pay a $40 million settlement in connection with the teen vaping epidemic. The company will also have to limit ads and sales of its products. And the world's largest crypto exchange just got banned in the UK. It doesn't have a license there. That and much more, coming up at NTD Business. Good evening, great to have you with us. I'm Paul Graney. E-cigarette maker Juul will pay $40 million to North Carolina over teen vaping. It's accused of fueling teen tobacco use. North Carolina's Attorney General sued Juul, accusing it of unfair and deceptive marketing practices targeting young people. As part of the agreement, Juul will not advertise to anyone in the state under the age of 21. It'll also keep its products behind counters at retailers and use ID scanners to ensure customer age. Teen use of e-cigarettes skyrocketed more than 70% after Juul's launch in 2015. Then the Food and Drug Administration declared an epidemic of underage vaping. And Johnson & Johnson has agreed to pay $230 million to New York State. It's to settle claims that the pharmaceutical giant helped fuel the opioid crisis. New York's Attorney General made the announcement, adding that the drug maker also agreed to stop making and distributing opioids in the United States. In 2019, she filed a lawsuit against a number of drug manufacturers and distributors, claiming they are responsible for fueling the epidemic. With this settlement, Johnson & Johnson will avoid a trial set to begin on Long Island this week. But the company says the settlement doesn't mean it admits any liability or even wrongdoing. It also says its marketing and promotion of prescription painkillers were appropriate and responsible. Marco Gobbetti is leaving British fashion firm Burberry. He's taken the top job at Italian luxury brand Salvatore Ferragamo. NTD's David Zhang has the details.
Burberry will be looking for a new boss. The British luxury brand is set to lose existing chief executive Marco Gobbetti. On Monday, rival Salvatore Ferragamo said he will be taking the top job there. The news comes after speculation of a shakeup at the Italian brand, which has been hit harder than most by the turmoil of the past year. Ferragamo has a famous past, making shoes worn by Hollywood legends like Audrey Hepburn, but is often now cited by industry experts as a possible takeover target. Last year, it brought back a former boss as executive director to help management revamp the brand. Now it says Gobbetti will take up his post as soon as he is released from his contractual obligations. He certainly has the right resume. Before Burberry, Gobbetti ran Moschino and spent 13 years in the giant LVMH group. There, he was CEO of Givenchy and Celine. Burberry investors did not welcome Monday's news. Shares in the firm plunged over 8% in early trades. Ferragamo shares gained around 1%.
On Wall Street today, big tech companies boosted the S&P 500 and the Nasdaq to new record highs. S&P 500 gained 10 points, more than 0.2%. The Nasdaq added 140 points, roughly 1%. The Dow did fall today, though, 155 points, or just over 0.4%. The UK is cracking down on crypto exchange Binance. It just banned Binance's UK unit from selling certain crypto-related products in the UK. NTD's Patrick Hayden has the details.
Britain is banning cryptocurrency exchange Binance's only UK unit because it isn't registered, but Binance says the move would not impact services offered on its broader Binance.com website. The UK ban covers regulated activity in the UK. While trading crypto itself is not regulated, trading crypto derivatives is.
So they will continue to operate in the UK, which for me seems like playing games with the regulator, and that is never good.
Binance withdrew its application to the UK regulator because it couldn't comply with anti-money laundering procedures. Unregistered companies are not allowed to operate exchanges in the UK. Stankovic says Binance is acting like its UK unit has nothing to do with its website, and she says that's not true. She says it's a matter of time before their ability to trade will be restricted.
I believe the payment systems, the banks that are working currently with Binance, they all saw their FCA statement, and I believe they will do that on their own.
She says currently it's unfair for companies like hers and other exchanges that comply with regulations. She says blocking Binance from converting cryptos into fiat currency could be one way to rein in the company. The UK regulators have ordered Binance to put up a notice on its website by June 30th. It needs to advise that it's not permitted to undertake any regulated activity in the UK. It also has to be able to give the regulators records of all its UK customers if requested. Patrick Hayden, NTD News, London.
And $3.6 billion apparently disappeared from a cryptocurrency exchange in South Africa. The two brothers who run the exchange have vanished, according to lawyers. If confirmed, it would rank among the biggest losses in the crypto industry ever. One of the brothers told clients that their accounts had all been compromised due to a breach, but neither of the two have been heard from since. One lawyer representing some of the investors suspects the coins are on the dark web or have been converted into other cryptos, making it hard to trace. He did alert the country's financial authority, but the agency can't get involved. It doesn't regulate cryptocurrencies. And the fees investors pay to hedge funds are declining for multiple reasons. Investors are no longer paying what was once an industry standard. NTD's Con Fredrickson explains.
The 2-in-20 structure was once a hedge fund industry standard. Investors give hedge funds their money to manage, as well as a 2% management fee. Then they pay a 20% fee from gains. However, these fees have shrunk over time. Daniel Lakaye, who manages around $6 billion worth of assets at the Tresses hedge fund, says one reason is that they've taken more risk.
Historically, we had hedge funds that had a strategy that was market neutral, beta neutral, very low volatility and very low risk.
Market neutral, beta neutral strategies aim to avoid risk, but Lakaye says playing it safe is less popular now, with investors wanting to take on more risk. However,
those funds that have maintained a strictly market neutral, beta neutral strategy, that have maintained the core principles of what was supposed to be the hedge fund strategy, those have maintained the fee structures.
Meanwhile, a recent study says the effective incentive fee investors pay is much higher than 20%. When factoring in variables, the report says investors are actually paying closer to 50%. Despite this, hedge funds are still quite popular, with an estimated $3.8 trillion under management, according to hedge fund research group HFR. Colin Fredrickson, NTD News.
And Tesla's image took another dent in China today. The company's recalling nearly 300,000 vehicles. Chinese safety regulator says drivers can just accidentally switch cruise control on or off during sharp turns. NTD's Patrick Hayden has the story.
Tesla is recalling more than 285,000 vehicles in China. China's Vehicle Safety Authority said Tesla was implementing the voluntary recall. Nearly 90% of the vehicles were made in China, the rest were made in the US. The State Administration for Market Regulation alleges there is a flaw in the Tesla system. It means that drivers could mistakenly switch on or off an active cruise control feature. This could lead to hazardous situations. The fault was identified in its Model 3 and Model Y vehicles. Owners will not need to take their vehicles in to get them fixed. A software update will sort the issue. Tesla has enjoyed a luxury status in the world's biggest electric vehicle and car market. To some extent, that brand image has been tarnished by a string of high-profile crashes, price changes and recalls. Tesla's share price seemed unaffected by the news Monday. They were up over 2% during the day. Patrick Hayden, NTD News.
And President Biden is apparently changing his tune on the infrastructure discussions and will in fact green-light the bipartisan bill. He supposedly threatened to veto it if his American Families Plan wasn't passed. Here's NTD's Kevin Hogan with more.
President Biden said that he understandably upset some Republicans when he said he would only sign the $1.2 trillion infrastructure deal in exchange for passage of his American Families Plan. That's a multi-trillion-dollar deal, and it's only backed by Democrats. Biden clarified his stance, saying that his comments made it seem like he was going to veto the plan that he just agreed to, but he said that was not his intent. A senior White House advisor expects Biden will sign both his American Families Plan and his American Jobs Plan if they make it to his desk.
And we expect to have both bills in front of us to sign. And I expect that President Biden will sign the infrastructure bill. He will sign the Families Plan.
After Biden clarified that he will not veto the measure, a top Republican negotiator signaled his team would move forward and try to pass it. Senator Rob Portman from Ohio said that he was glad to see the president clarify his remarks because it was inconsistent with what he had been told along the way. What's more, Senator Mitt Romney says he takes the president at his word that he will not veto the infrastructure bill, and he says he'll support a bill that fixes infrastructure, but not one that increases taxes to do so.
That is not something we will support. But fixing the infrastructure in our country, fixing our airports and our roads and bridges, transit system, rail, those are the kinds of things we will support. Don't raise the taxes, fix infrastructure, we can get the job done.
Democrats have said they wanted to pass the American Families Plan, which costs about $1.8 trillion, and they would do so by budget reconciliation, which could bypass the GOP filibuster with only 50 votes and VP Harris's tie-breaking vote.
70% of millennials are living paycheck to paycheck, according to a new survey. Some young people blame the economy or the economic system for their challenges. It's capitalism's fault. Lance Roberts agrees the system is making most people poorer, but it's because we've moved away from free market capitalism to corporatism. Government policies and decisions are actually shielding big corporations from failure at the expense of smaller businesses and wages in general. Ask Roberts about it.
Capitalism by its very nature is Darwinistic. The strong survive and the weak perish. The problem is now we no longer have capitalism in the market. What we have is corporatism. And these are really two different things. Capitalism is what we're used to. That is your next door neighbor that runs the salon down the street, your other neighbor that has the auto mechanic shop. They're participating in capitalism. If they do well, they do well. If they don't do well, they fail and go out of business. Nobody comes and bails them out, right? What we have now, though, in the economy is that if you're a major corporation and you have lobbying power, then what happens is you run to the government every time you get into trouble and the government bails you out. That is not capitalism. Why is that not capitalism? When you bail out a company that should fail, it not only utilizes capital, taxpayer dollars in this case, in a non-productive, efficient manner because you're just supporting a failing company, but it also displaces the opportunity of a young entrepreneur, a young person that wants to start a business in that space. They're forced out of that space. They're not able to capitalize on the failure of that other company. So it causes a problem within the system of forcing more capital and displacing capital into failing companies. And this is where corporatism leads to. And now we have this big disparity in wealth, and a lot of this is caused by executive compensation problems. Also, another side effect of some of Clinton's ideas during his administration about trying to fix executive compensation created one of the largest wealth gaps in history because of stock options, stock buybacks, and this is all part of a function of this corporatistic structure that we built in the economy over the last 20 years.
If you had to estimate, how much of a drag do you think this culture of corporatism and bailouts has on the economy itself and the economic growth?
Well, so we've been migrating towards this point in time since 1980. In 1980, Ronald Reagan started to provide deregulation of business. He deregulated the financial industry. And this is really the kickoff point of this move towards this more corporatistic structure that we currently have today, where finance makes up such a big portion of what happens with economic activity in the overall. And if you take a look, back in 1980, we were growing at 8 and 9% economic growth rates. In 1999, we were growing at 4 to 5% annually. In 1999, 2000. Since 2008, we've been growing at less than 2% on an annualized basis. And that's likely going to be the case going forward because we're continuing to divert capital from productive investment to capital that basically is housed within smaller groups of individuals and corporations, which, look, if you're in the top 1%, there's only so much money you're going to spend in the economy. I mean, there's only so many boats you're going to buy, so many race cars you're going to buy, so many planes you're going to buy. And if all the capital is locked up within this top 1 to 10% of the economy, it slows down economic growth. In an economy where we're 70% driven by consumption, they have all the capital, right? So that's your problem for creating growth. Applied debt on the other side of that problem, which is also non-productive, And you see why we have a problem creating stronger rates of economic growth and sustaining that.
Lance Roberts, Real Investment Advice. Still to come this evening. Summer movie season is back, so which films claimed the top 5 over the weekend? And a small town in Europe is offering homes for less than $1. It's in desperate need for more people, so what's the catch? That and much more coming up after this short break.
Hello, I'm Mike Lindell, inventor of MyPillow. Thanks to your support, you've helped make MyPillow become one of the fastest growing companies in America. I'm interrupting this commercial right now. Retailers have canceled MyPillow, and to thank you for your support, I'm going to pass the savings directly on to you. For example, you get my 6-piece towel sets, regular $109.99, now only $44.98, or MyPillow dog beds for as low as $19.99 with your promo code.
Welcome back. Sherlock Holmes is coming back, this time in audio form. Swedish audiobook service Storytel has signed a deal with the Conan Doyle estate to create all new Sherlock Holmes stories. Holmes is the hero of the fictional detective stories created by Arthur Conan Doyle in 1887. It has a mass following across the world, and his character has inspired movies and TV shows. Novelist Anthony Horowitz will write the new Holmes audio stories. Storytel itself offers 500,000 audiobooks across 25 markets, competes with the likes of Amazon's Audible, and last month it even signed a deal with Spotify to allow subscribers to listen to audiobooks on Spotify later this year. Storytel will release the new audiobooks in the spring of 2022. There was no doubt that what would be the weekend's #1 movie, only how much money it would make. David Daniel has the early estimates for the box office top 5.
You, grubby girl.
Cruella spent a third straight weekend in 5th place, earning $3.7 million. It's up to $71 million domestic. Peter Rabbit 2, The Runaway, took 4th place with $4.85 million. The Hitman's Wife's Bodyguard fell from 1st to 3rd on ticket sales of $4.9 million. A Quiet Place Part 2 stayed strong in 2nd. $6.2 million put the sequel at $136 million domestic.
Where's the bridge?
F9 The Fast Saga zoomed off the starting line, beginning its North American run with $70 million, the biggest opening weekend since Star Wars The Rise of Skywalker 18 months ago. In Hollywood, I'm David Daniel.
And a town in northern Croatia is selling its abandoned houses for less than $1. It's trying to attract new residents because its own population is only half of what it was 70 years ago. But there are some strings attached to the deal. NTD's Colin Fredrickson brings us the story.
This Croatian town is selling houses for 1 kuna, or just 16 cents. Legrad is hoping to attract new residents after suffering a steady population decline over the last century.
So far, we have offered 19 pieces of real property, including houses and some building plots. By the end of the month, we will have sold 17.
The mayor says the offer has attracted interest from around the world, but the town is mostly interested in people from the region, like this young man and his family from northern Croatia who took up the offer.
We liked the house, so we applied. We were living in a rented apartment. We paid the utilities, but this is ours now.
But there are some conditions. You must be under 40 and financially solvent, and you have to stay there for at least 15 years. But that doesn't seem to be an issue for some.
In the papers, it says 15 years minimum, but that is not a problem at all. The house is built and we don't have any plans to move or sell the house.
Also, the new owners will need to spend some time and money to repair the houses. Some of them are half ruins, without windows and doors, some of their walls covered with mold. But the town is also offering around $4,000 to pay for renovations. The mayor also says they may have more properties to offer in the future. Colin Fredrickson, NTD News.
That's the latest business updates for today. You can still catch NTD Evening News with Stephanie Cox. That's at 6:30 p.m. Eastern. For NTD Business, that's all for today. Thank you for watching, and we'll see you tomorrow.
We have a new channel. Subscribe to us on YouTube at NTD News. Get the highlights of our news broadcast and the most important headlines that we curate especially for you.
Don't let YouTube decide what information you get. That's your choice. YouTube is deleting our videos and cuts you off from a source of honest reporting. Make sure you don't lose access to NTD's news content, and take a quick moment to subscribe to our newsletter so no matter what happens here, you'll keep your access to a trustworthy news source.